We've got the Group CFO from Teamstar, Mr. Tan Jian Wei.
Teamstar retail outlets, we sell mostly interior home improvement products. So we have home improvement organizers, some general functional furniture fittings products, decorative surface products, power tools, adhesive, coatings, and another one is kitchen and home appliances as well.
How do you ensure you avoid committing errors to bring in slow-moving or obsolete or non-popular stocks?
We have a system where we use careful stock forecasting. Second is inventory aging analysis. And then third is internal team feedback from our retail outlets.
Hello there, welcome to Kleverstock. My name is Wan Izel, and today we have a very special corporate feature interview. We've got the Group CFO from Teamstar, Mr. Tan Jian Wei. Thank you so much for coming for this interview today. And I'm hearing it is the first interview that you've ever conducted.
Yes.
I'm glad to be the one to first interview you. All right, so we'll get straight to the point. So since this is the first time that Teamstar Berhad, as a new IPO company, that you're doing an interview with Kleverstock, of course, this is the first time. Can you maybe share with us, also with your audience, what type of products you guys are selling or by your retail outlet?
So maybe I'll start off. Thank you, Wan and Kleverstock team for inviting us to here today. So Teamstar retail outlets, we sell mostly interior home improvement products that are used in renovations, refurbishments, or any other interior home improvement activities.
I see. So if I'm looking to renovate my house, I go speak directly to you.
Yes, yeah.
Fantastic.
So maybe I can break down even more like what we offer. So we have home improvement organizers, that's one, and then some general functional furniture fittings products, decorative surface products, power tools, adhesive and coatings, and another one is kitchen and home appliances as well. So we have very wide range of items that we offer in our retail store.
That's very interesting indeed. Okay, for those investors, that they're not familiar with the hardware shop business, Teamstar, your business, Teamstar, it looks quite similar to that of Mr. DIY shop. Everyone knows Mr. DIY.
Yeah.
But what are the key differences between both you and Mr. DIY? Does Teamstar adopt a similar tagline of everyday low prices like Mr. DIY? What's the difference?
Yeah, so essentially it's down to our products that we offer. Mr. DIY, I would say they do offer some of the furniture fittings, accessory products, and hardware products, but they are more of a general store right now. Whereas in Teamstar here, we are specialized in interior home improvement products. As I mentioned just now, our products are more functional and technical, which require some sort of a technical knowledge to use it, and hence our customers are mostly carpenters, interior designers, contractors, renovators, those who are more involved in the interior home improvement market. We also have some end consumer as well, right? How would they know how to use our product? Because we also post a lot of videos in our social medias, even in Telegram groups as well, to educate our customers on how to use our products, how to assemble them. So essentially it's down by the products that we offer. We are more specialized in the interior home improvement products, like the furniture fittings that are more functional, technical.
Sounds to me that you guys are like somewhere in between Mr. DIY and IKEA.
Yeah.
So that's a really good thing to see. Okay, so since Teamstar is selling your products to professional buyers like carpenters, interior designers, architects, what are the key attractions for those professionals to keep on coming back and buying from your retail outlets?
I would say we have a few key attractions to this. First, it's our wide range of product SKUs. Second, it's our competitive price. And third, it's our presence throughout Malaysia. So for our products, right, we offer basically product A to product Z, where the customers, they can come in and buy whatever they need in our store itself. So essentially, we are a one-stop solution for home improvement products. Then next, our prices, they are priced competitively as well. We have actually different tiers of brands that we offer. We have from lower end and mid-end tiers are much more affordable, like our in-house brand Renault and House. Then we have a more premium brands that are much more reputable in the global scale. So we have Bloom and TTC, for examples. So all these different brands, they have different prices. So it will attract different customers with different budgets, right? And then lastly, our presence throughout Malaysia, we have about 29 stores right now, and increasing more in the future. So this gives convenience and also brand visibility to our customers. They know where to find us. They are able to access to our store easily as well.
I like how you mentioned the three major things, the three P's: products, prices, and presence.
Yeah.
It's a really good way to put it.
That's a good way to put it.
Yes. Maybe can you share with us a little bit on your key indicators that we can apply to predict the future performance of your company? Maybe you can tell us a bit about those key indicators. You know, it's that we can rely on, of course, property market data or construction industry activity, or is it any other indicators that you can tell us a bit?
So our products, they are more used in old properties and new properties. So when I mention these two, you probably know which kind of market that we are going to refer to. So I'll start with the new properties. It's more towards the property market data. Maybe you can get data from the Department of Statistics Malaysia, as for example, and then I think some property developers, they also have like associations data research as well. So you can get your market indicators from the new property market. Then for the old property market, it's a bit tricky. It's because there's not a really official research or statistics that quantifies that market. But from our past results and past sales and also feedback from the market, the old properties is actually quite a big market. There's the renovation market basically. The renovation refurbishment market is very big because when you buy a new property, most of it maybe they already are furnished already or semi-furnished. Whereas the old property, when someone wants to refurbish or renovate their home or even commercial buildings, they'll renovate the whole space. So in a sense, the whole area of that old property will be used for renovation. Hence, the market is quite big for this.
Okay, so moving on. We noticed that Teamstar, you guys selling products and has increased from 23,000 stock keeping units or SKUs to now it's 28,000. That's a huge jump of at least 5,000 SKUs. However, when you keep on expanding the number of SKUs offered to the customer, how do you ensure you avoid, committing errors to bring in, slow moving or obsolete or non-popular stocks? How do you differentiate or how do you balance that out?
Yeah, so this is down to managing our inventory system there. So in our back-end side, we have a system where we use careful stock forecasting. Second is inventory aging analysis. And then third is internal team feedback from our retail outlets. Right. So for I'll start with the inventory aging analysis and the stock forecasting. It makes sure that we don't overstock or understock ourselves. We make sure to bring in the more popular items to make sure they are ready stocked for our customers because they are more high in demand. And then second, we're also able to avoid any slow moving stocks or we can identify them if they were to come out, right? So once let's say we identify the slow moving stocks from our analysis, then we will conduct remedy measures such as clearance sales and promotional campaigns to clear off these stocks and avoid any impairment or write-off.
Who doesn't like a clearance sale, promo sale?
Yeah.
I'm sure with Chinese New Year coming up, you've got a lot of promo sales happening, right?
Yes.
Okay, now speaking about your SKUs from 23 to 28,000, that's quite a big portion of your products also coming from overseas, imported from overseas countries. Whenever there's an increase, of course, in shipping costs as well as the volatile foreign exchange movements, ringgit performing extremely well right now. Are you able to increase your selling price immediately to cover the rising costs of those shipping costs? How long do you take to adjust your selling price, to in order to maintain your company's profit margin?
Yeah. So we don't typically adjust our selling price just like that, right? One, I mean, it will affect the customer sentiment as well if we just simply adjust the prices out of nowhere.
No, of
right?
course not.
For foreign exchange, the movement is volatile. We can see it goes up and down all the time, and we put a benchmark on it. We also put a sensitivity testing on this. If there's a 10% changes in the foreign exchange or even the shipping cost, then we will start to adjust our selling price 2 or 3 months down the line, right? Another one is we will get market feedback, and typically market will respond in 2 or 3 months as well down the line. Then we will also start to change our selling price accordingly. So in the end, in the short term, we may suffer a little bit from the rise in cost, but it's okay, because in the longer term, once after adjustment, our margins will stabilize. You can actually see this from our past year results from to even now. Ringgit for the past 3 years has been quite volatile, even though right now it's strengthening. Last time it was quite volatile, but you can see that our GP margins and our PAT margins have always been stable. Around the GP margin was around 30% over there, and then PAT as well has improved from 10% to 12% now.
That's good, thinking about the long term instead of short term. I like how you put that. Okay, so generally, does your business suffer or get affected by the dumping action initiated by Chinese manufacturers into the Malaysian markets? We all know when it comes to China, there's going to be always some volatility, some sort of geopolitical situation that's happening. And, especially since now that China are facing overproduction issues in their own home countries, does that affect you guys? And if yes, how do you overcome this kind of distorted market action in Malaysia?
So this dumping action from China, the products are mostly common, they call it common or single product items. And they are very typical and common specifications. They are low in cost, so their selling price is very low, and hence their margin as well is very low, right? Whereas in Teamstar here, we focus on a mix of products. We don't just have common items. We also have items that are high specs, so very technical and very functional as well. And so these kind of products, duplication is minimal, right? Okay, and we also have a high mixture of all of these products, and we bought them in a lower volume than the single common items. So there is not a direct competition in this, right? But ourselves here in Teamstar, we make sure we always improve our marketing efforts. We also improve our servicing to our customers. So not to say it's a bad thing, because the market is open for anyone to come in, right? Hence, we don't frown upon this or anything. We accept and we challenge ourselves to change and improve ourselves when it comes to servicing, comes to marketing, and comes to sourcing innovative and modern products for our customers to use in this Malaysia market.
That's true. The main difference between Malaysia and China, quality over quantity.
Yeah.
Okay, now we move on to the most interesting part. Your company is going to be listing on the ACE market of Bursa Malaysia very soon.
Yes.
All right, you must be excited for that. How much equity funding are you guys targeting to raise through this IPO exercise, and what will be the major usage of your funds for this IPO?
Yeah, so the proceeds that the company will raise will be approximately 34.3 million, And there is two main usage to this. First, it's setting up 10 new retail outlets, and we are using about 3.7 million for this. And then the next is adding new warehouses. So that's about 19.5 million. So we believe that by expanding our outlets and warehouses, we strengthen our logistics and supply chain capabilities. Second, we're able to reach new markets because we want to set up new retail outlets in Kedah, Penang, Johor, Sabah, and Sarawak. So essentially, we want to capture more new markets opportunity, better serve our customers as well, and we believe that this will help us to achieve a better and greater financial performance in the coming future.
Fantastic. I like how you're going to put most of your funds to good use.
Yes.
From 29 outlets currently, you're going to be expanding to 39 outlets in total. A very good number indeed. And the fact that you're not only focusing just Semenanjung but also in East Malaysia.
East Malaysia.
Yes, that is a really good sign as well. Now, the question comes, with the funds that you're raising, opening all these new outlets and warehouse, of course, there's going to be a concern in the larger the revenue, the more working capital is required to be, to employ, to pay your employees, So how do you ensure that there's going to be sufficient working capital to be sustainable, on a sustainable basis to support a larger number of new outlets, like maybe 50 to 100 outlets moving forward? How do you maintain that stability?
Okay, so I can answer this in 5 perspectives. All right, and it's the 5 ways we were able to excel. First, it's our inventory management. We optimize our inventory management system by ensuring our stock forecasting, inventory aging, and all this to make sure our inventory turnover days remain on average. Right now it's on 100 days at that. It'll be even better if we can able to reduce that in the future. This inventory turnover days is basically affected by ability to stock the popular items and also to avoid any slow moving items. Okay. Then the second will become to trade payable turnover days, right? Our relationship with our suppliers, we have long-standing relationship with them already. So the credit terms that they're able to provide us is also very good. I think on average it's 60 to 90 days. So you can see our payable turnover days from our prospectors, it's about 90 days. And then from our receivable days, it's also kept at 60 days average, around there. So this shows that we are able to collect our cash fast from our customers. So all of these 3, we're able to get about the cash conversion cycle about 60 days. So it will be even better in the future. We are able to decrease that now. But right now it's actually at a very healthy position. And then the 4th one will be our business model, which is cash and carry from our retail store. And this is a very cash generative business. So the everyday cash sales will be converted and recycled into our working capital. This is also evidence from our past 3 years. We were able to open new outlets every year. On an average of 3 years, we have opened, I think, 3 to 4 stores per year on average. Right? And this is because we are able to use our everyday cash generated sales to recycle into our capex to expand our retail outlets. All right. And then the last one will be our low gearing ratio. And this gives us a big headroom and big reserve for us to utilize external fundings from borrowing, from bank borrowings in terms of any shortfall. So all of this plus together, I believe we are able to manage our inventories, our working capital well.
Fantastic.
Which we have been doing for many years now.
I mean, if you guys are heading towards the East market, I think you're going in the right direction.
Yes.
So, thank you so much for your time today, Jian Wei. Now, before we end off this interview, I first would like to say congratulations and good luck for the
you.
upcoming ACE market listing on Bursa Malaysia. But before we leave, maybe you can leave us with some words of wisdom. Anything you'd like to say, specific words for your investors that you'd like to address them? Please go ahead.
So, Teamstar is a profitable and scalable business. And why I say this, because it's already evidence from our past record and also from our predecessor as well, which Mr. DIY. Even though the products that we offer is different, we are more specialized in interior home improvement products, but our business model is almost the same, which is cash and carry sales. So we are also cash generative business as well. And so we are thankful for Mr. DIY's listing. They are able to show investors how profitable and what a big market this home improvement industry. And I believe with Teamstar's expansion plans of adding new outlets and adding new warehouses and expanding our product range, we are able to achieve a greater financial performance and also become one of the market leaders in the home improvement industry in the future. So in this, I hope the investors do join us in shaping the home improvement industry in Malaysia together by considering Teamstar Berhad as part of your portfolio.
All right, fantastic. Thank you so much for those wise words of wisdom. And like he mentioned earlier on during the interview, this is a company that's thinking long-term. Teamstar with the wide range of products, the 3 Ps that we mentioned, wide range of products, good prices and presence all around Malaysia, good inventory of products as well, and aiming to have 39 outlets soon. All right,
And
so
more as well in the future.
I mean, it's going to be in the future. It's going to happen sooner or later. All right, that's all from myself, Wanizul, right here on Kleverstock. A wonderful corporate feature interview with, of course, Mr. Tan Jian Wei, who is the Group CFO for Teamstar, heading towards the ACE market of Bursa Malaysia. We'll catch you again on the next one. Have a good day.
Scan now and download Kleverstock, your trusted source for market insights.